I'm in the camp that this is a normal decline in the overall market. This has been a de-risking of the market, which happens periodically. In fact, in the 10 years we've seen since the Great Recession of 2007, 2008, this is the third decline in small caps, third bear market within the small cap market. And all have been driven by what I would call a growth scare. 2011, it was driven by a fear of a double dip recession in the United States. In 2015-16, it was driven by Asia's issues at the moment, China specifically, and then once again, another China issue at the end of last year. We lived in a world in 2018 where people were looking for the next recession, almost wanting the next recession, and the correction in the market almost became a self-fulfilling prophecy in many respects in the latter part of the year. But to me, it was a simple de-risking. And you can say that purely because you saw many classic signs within the small cap market in that de-risking moment. Value outperformed growth. Defensives did better than cyclicals, kind of your normal pattern that we've seen historically. I think 2019 is actually going to be a decent year for the small cap space. And I think if you go look back historically over the history of the Russell 2000, following severe declines, so last year was our 12th negative year for the Russell 2000, in 10 of the 11 previous declines, you've actually seen nice returns for the Russell over the subsequent year, with an average of about 21%. The one time that did not take place was in 07 into 08 as we were heading into the financial crisis. While I don't see 21% return for the Russell next year, although it is possible, who knows what's going to happen, I do think you'll see more muted returns. I do think that the market's going to be okay, and this is a great opportunity for small cap investors in the small cap space. I think key to the market in 2019 is going to be selectivity. Active management is a big portion of that. And I think part of that is going to be driven by the fact that earnings should be better for select companies. While the overall market and the overall index itself might see earnings come down a little bit, I do think you're going to see certain strength of earnings in certain areas of the market. Industrials being one of them. I think there are sectors out there, more economically sensitive or cyclical areas of the market that should advance and do quite nicely from an earnings perspective that the market really hasn't focused on yet. And you're hearing that many companies are actually very optimistic about the economy. I should say cautiously optimistic about their specific outlook. I think you're going to get more earnings opportunities.